Good evening, ladies and gentlemen. Today was the 25th of March, the monthly expiry, and what a day it was. It was extremely volatile, was trending down for most part, saw this massive short covering rally, completely expanded the calls, some calls went 20 times, and, um, and then we saw this massive reversal again as soon as averaging started. Today was one of those days where it would have done an immense amount of damage to anyone who didn't have a stop loss. And even if you had a stop loss, there were multiple points of slippage. I think in multiple orders I had upwards of 6, 7, 8 points of slippage per order on the stop loss. So it was a very bad day for me. I more or less managed a 10% drawdown, and that was just one of those days in the market where in a lot of ways I myself acted in an indisciplined manner. Towards the end also had some technical issues with getting out of certain orders, was unable to place exit orders. But all that said, days like this do happen in the market and the idea is to survive them. I personally behaved quite badly with my trades today. If you go to our Telegram channel, my trade book is available there for you to see. It was more or less fine until the last half an hour where this massive slide exploded puts which were trading at 4-5 to above 90. So that being said, I think if anything should be a takeaway for anybody watching this video today is that the market is a very dangerous place and it only takes a few slip-ups to really punch a hole in your capital, and for somebody who wants to survive on the longer term, ensuring that you don't burn your hands too much on any particular day is very important. And losses happen, losses are the reality, and you need to not let that set in on your mindset, and you certainly cannot trade with the intention of recovering what you have lost. So I hope you have some takeaways from this video, and I hope your expiry trades didn't do as badly as mine. Thank you so much for watching.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
We basically sold the 14400 put and the 14600 call at the open, but the 14400 really started expanding. So we rolled it down to the 14350, and we also rolled down our call from 14600 to 14550. Now the idea is we will wait for a test of 14400 to then again roll down these puts further, and until then we will not too quickly adjust on this side. We have our stop loss market orders open on this at 43 in case there's some kind of big cascade, then we'll get out of there. Also, bank Nifty is completely losing it. Bank Nifty is now below 33,000 and complete huge sell-off. Right, so we'll have to see at which point this becomes a value buy. But anyway, 14,350 on the Nifty looks good for now, wherein we are more or less 90 points away from the spot, and it's very good premium for an expiry day of 31.32. We also have our call side which protects us. So on the downside, our break even currently would be so let us say there is 56 points in this, so our break even would be 14,300, and in case we really start further cascading down, then we will be getting out of our sold puts and having a stop loss on our long puts and our short calls. So that will be the plan. Let's see if 14,400 holds. It's hardly 15 minutes since the market opened, so the OI data will not give us much, but basically a lot of long unwinding happening. A lot, everyone who had sold the 14,500 put, basically everyone got out of that position, and that is what is leading to this bleeding. So that being the case, very good premium, 55 points. We are sliding, but yeah, not expecting, and the calls are not going down too much either, even though the calls are 100 points away and we're in a downtrending market, because people are expecting potentially a short covering kind of move to come in at some point. So that being the case, we'll keep you posted. Just 15 minutes in and already so much action. Should be an interesting day. Taking a look at the open interest, we are not seeing 14,500 and below puts being unwound. In fact, we're seeing addition at 14,500 and below. Now, that can mean two things. So right now, 14,500 is the best case scenario for expiry. 14,450 also has positions, 14,400. So these three spots are very good, and of course with a bias towards 14,500. But the problem now is, since there's no unwinding and there's an actual addition, if we continue to see a sell-off, then everyone will unwind at once. And if everyone is unwinding at once, that is going to be a massive sell-off. Once again, we're seeing a dip, but now the day is low. Our plan will be, if we start testing 14,400, we will exit the puts and move them one more strike lower. So that's the plan for now. We'll keep you posted. IT is getting completely destroyed as well. Reliance surprisingly is outperforming the market big time. So one observation is that basically now 14,600 is looking like a ceiling, an absolute upside ceiling. And meanwhile, 14,400 is seeing good amount of writing. So 14,400 good premiums. Just currently 20 points away from the spot, is not seeing much unwinding. It's seeing a good amount of writing despite the dip. Now this will tell you that there should be very good support, but this should also tell you that in case this starts breaking, then there can be complete mayhem on the downside. So that's why, anyway, our position is kind of like this. We have moved quite our puts sold are at 14,350, so still below what looking like a very strong support now, and our calls are at 14,500, and majority of them are at 14,550, and about little more than 1/3 the position is at 14,500. This will balance in case there's some kind of a cascading down move. We have stop loss orders at 46. If the put really starts expanding, that we'll have to have a cascade below 14,400 for that to happen, in which case these options, these long options, will spike. They will go up like anything, but they will also crash like anything as soon as there's the first sign of a reversal from that whatever down move that we can see. So the idea will be to trail the long stop loss on this if that goes, and then potentially take in more credit from the call side as well. For now, looks like some kind of halt is there around this 14,400 zone, and some support is building up. Bank Nifty has been absolutely smashed, right? And now it's trading just below it. You can say more or less at 32,000. There'll be a lot of positions building up on Bank Nifty around 32,000. We'll have to take a look at that. So if the first Reliance surprisingly is holding above 2,000, which also is very interesting. IT is getting completely smashed, continues to trade at the day's low. Not sure what is going to happen with IT and how much lower it can go. But currently from Bank Nifty and Reliance, there seems to be some kind of stability. That being the case, we're going to keep our position as is for now. One more thing that I've done now that we've taken support of 14,000 is that these calls once again went up a little bit in value, and used that opportunity to move the 14,550 calls to the 14,500. Now the idea is will be, if we start making an up move from here, then and we hold above 14,450, then we will once again move back the calls, or potentially consider moving up the puts as well. That'll be the plan for now. We are currently 70 points away from the call side and 80 points away from the put side. So 150 points triangle with 61 points in it, and our hedges have about 10. Okay, we're now seeing this dip led by Bank Nifty, which is now 130 points below 33,000. And what that's leading to is these puts expanding. These calls are losing quite a bit of value. It's fine. So the idea will be, if we hold this range or lose 20 points from here, because we don't want to bounce off 14,400, then we will start moving down to the 14,450 call, basically coming closer and closer in. So that's the plan for now. We'll wait for this range. These puts are not rapidly expanding, which means that there's a lot of supply. People are willing to sell this put. At this point of time, there's not that much fear on the downside, and given the current pricing, people are willing to sell. And currently, what is the break even on our position without considering our mark to market? Basically, there is about 56 points in this, minus 11 on our hedge. So you say 45. So roughly 14,305 is our downside break even. One more thing to quickly go over, right, in terms of how generally these things work. In a down move, my sold puts will expand, but the bought puts will also expand. They'll give very good return. But if you keep moving down your call side, you'll see that the spread in calls is never that good, because what happens is when the way put IV spikes is that OTM puts really spike because you don't know how far it's going to fall. But in an up move, the OTM calls don't spike the same way. So so in fact, when it's an up move, even though your sold put is losing quite a bit of value and your call is not gaining that much, the fact is your bought call is not gaining anything. So there's an imbalance there. That's just something that you'll notice when you trade this kind of spread over a long period of time. And yeah, we continue to hover around 14,400, and the idea now will be we need a good move of 30 points in either direction to then start risking off from one side, and that'll be the plan. Bank Nifty taking some kind of support at 32,900 for now. Okay, one more question to answer is, what is the margin being used? Margin being used is 1.4 crores, and available margin is, I still have some available margin left in case I need to make some changes which might change the margin slightly. How many lots are being traded? There are 462 strangles on the Nifty. So you do the math and it'll come up to something like 30,000 per strangle when on MIS and with hedging benefit. So if you want to check the margin, go to orders, go to basket, create a basket, whatever, put in a position, and it'll show you what the margin is. So it's not rocket science. A lot of questions around margin. It's not very complicated. Margin can be calculated using the basket order, and this is the margin that I'm using to trade 462 lots. So if you see what's happening on the open interest side, both 14,500 and 14,400, so 14,500 call and 14,400 put are seeing very heavy action, good writing because premiums are also quite good. And what that is, yeah, so 14,400 very strong despite the dips, despite being just 10 points away, and despite testing 14,400. 14,400 put continues to see strength, and 14,500. So the more or less expected range is this, and currently our positions range is 14,350 and 14,500. We are more afraid on the upside than the downside, and so what we're going to do now is, for now our view is right, more or less. Sorry, not right, it's in line with the view of the market, and I'll continue to hold the same position and really wait for some kind of a big break above 14,560, and so to then manage the call side. The downside, even if we test 1400, we're not too concerned about that at this point of time. We'll keep you posted. Okay, something to notice now is Reliance, its entire consolidation is now breaking down. Now if the volumes pick up here and we start hitting below 2000, that is going to be a massive problem. So this sudden weakness in Reliance, we'll have to see what happens. We will. This is because now Reliance is joining the party, and this. Bank Nifty at the day's low and Reliance potentially a breakdown. We don't want to take the downside. It's just not worth it. Okay, and we'll also now start considering moving down our calls. We will move half quantity of calls to the 14,450 call. We'll wait for 10 minutes of us holding below 14,400, and then we will roll down the calls if it is necessary to do that. Also, one more thing we'll be doing, 15,200 is the hedge. So, okay, we moved down our calls to 14,300, which is at this point available for 25, and we moved down the puts, and we have not yet moved down our calls. We will wait for this level to be held for at least 10 minutes, so we need another two candles, and if that holds, then we will move the calls to 14,450. Until then, no changes to be made. We'll have to see if Reliance takes support at 2000 or cascades. It all depends on what kind of volumes are there. Okay, so what we've done is we're holding below 14,400, so we have moved roughly 30% of our calls down to 14,450. We hold for another 15 minutes. We'll move another 30% down, and after that we'll see what's happening and then take a call. Currently Reliance is, so this has happened, and now will be interesting to see volume pick up, and then we head below 2000. What happens there? IT has found some kind of stability, but Bank Nifty continues to trade at the day's low. I want to go over one Bank Nifty trade also. So in the positional trade, Bank Nifty April future giving us huge loss, right? But if you see from the options that we have managed this loss and made it to about 77,000, and that's fine because we're anyway trying to carry this future. We're bullish on Bank Nifty over a period of time. On a month-on-month basis, if it's going against us, then we will manage like this with calls. So that's what's happening on Bank Nifty side. Bajaj Finance as well, not doing any management as of now, not on a day like this. We'll come back to it. I consider these futures as shares that I'm holding, so I'm not going to worry about it moving up, down, up here and there against me. And yeah, Reliance taking quite a bit of damage at this point of time, but no adjustments to be made to this position. And yeah, so we're almost at the break even. When we entered also, we were almost at the break even, and we will continue to hold this. We'll see if 2000 is broken on Reliance. Today is an expiry day, so on an expiry day, making adjustments to positional trades just doesn't make sense. I don't mind taking the downside risk on Reliance. I'll figure it out how to roll it forward or move down the calls at a later point. For now, just going to hold as is. So that's more or less on the positional side. Obviously, they're bleeding because of the kind of IV spike that will be there in majority of this, as well as delta moves. And meanwhile, we continue to hold our position as it is. Now we are firmly holding below 14,400. So we'll be moving another 30% of the calls down, and then we'll see from there what should be on exchange. Okay, so what we're seeing now is Reliance sort of held on to 2000, but Bank Nifty is just like, I don't even know at this point. We are going to buy bank piece today, that's for sure. It's just sliding now 250 points below 33,000, and looks to keep going like a bottomless pit. IT is also stable. Reliance is also stable about 2000. That's crashing the calls. We moved all our calls down to 14,450, and we have stop losses on the puts. So we have 37. That's the stop loss. And currently this triangle is trading at 46, 47. We're going to continue to hold this position. We're seeing that there is still not too much unwinding of puts at 14,400, and people writing 14,300 and 14,200. So let's see till where this cascade goes. We'll not be taking, currently from where we are, our downside break even minusing our current M2M would be say 50 points below, so 14,250 on the downside, and on the upside 14,500. Range seems fine for now. I mean, how much further will Bank Nifty get sold into before somebody's like, okay guys, buy the banks? Yeah, more or less that is that. Today's an expiry, anything can happen. We can close at 32,000, but it's very possible. Never write off a situation like that. So that being the case, we continue to hold for now. Reliance still holding on is a sign that the market isn't going to completely crash. Okay, so Reliance kind of has been bought back now, and that 2000 has been held. What's happening is these calls are starting to spike without any evident reason. So we're having a call side IV spike that potentially people are expecting some kind of short covering move now. So the idea will be if we test 14,400 now, I think is a lot of confidence would have built up. We dipped and then we got bought back from there. We will then start moving our puts back up to 14,350. So the idea is we will wait for 14,400 to be tested. We'll move half our puts up, and then we will consider moving the other half. So these calls are starting to expand. People who have shorted are feeling the pinch of a potential expansion and starting to buy it back. We don't want to be too quick with moving back our puts as well, so we will wait. We'll wait for 14,400 to be tested, and then we will get out of this. What this is looking like is we dipped, and then there's demand, trying to dip, but there's demand. So that demand is what is freaking people out a little bit. Anyhow, for now we're going to hold it as is. Let us wait for the upper levels. Okay, so just when you thought this on this spike, apparently not. Bank Nifty continues to slide, and our stop losses are hitting. Okay. What? Okay, that was a freak stop loss hit, but we will quickly sell this to get back in it to a certain extent. Okay, that was unfortunate, but it happens. We got freak stop loss out at what prices? So at 38, 39, 40, 40, 40, 40. So quite expensive. We were going to adjust anyway for that position we were going to, but meanwhile, anyway, can't be helped. That stop loss is now out. We'll be rolling down our calls now to 14,400 as well. Well, you can't crib about stop losses because more times than not, they will do better than worse. They'll save you more times than they will cause harm to you. Okay, we'll also do is roll down our hedge for the 14,000 put. Okay, so what we've done is we've exited our 14,100 hedge and moved it to 14,000. Our put now is at 14,250 and call is at 14,400 with this triangle still having about 48 points or so. We're now testing 14,300 and once again we have stop losses on this at 35. So if 35 stop loss hits, then we will again move down because this is a slow kind of cascade. There's no momentum here to buy options, unfortunately. So let's see if the stop loss does hit, then by then if we're getting to hitting our stop loss, by then we would have moved this to 14,350 as well. So that being the case, what a move. Now breaking most supports that we would have expected. 14,350 being the recent swing low, people would have expected that to hold, but break down from there. But yeah, still decent triangle pricing. It's only 12 o'clock. Still got 3.5 hours to go. Okay, one more majorly unfortunate incident. We got stopped out of the 14,250 puts also. And unfortunately, the slippage took quite a bit. 38 and executed at 46. So really got screwed on slippage. Almost like 8 points of slippage. Can't be helped though. It happens when there is a panic move like that. We re-entered on the 14,200 put the same time that our stop losses hit. Now at 14,200, 14,400, 100 points either direction, and lots and lots of volatility. That's all that can be said about what is happening at this point of time. We'll keep you posted. We're now more or less neutral for the day, and tricky expiry. We'll keep you posted. This triangle has 37 points and our hedge costs 5, so sitting on 32 points potentially on one triangle, which is still a decent enough approach to the day. Let's see where things go from here. There's some big short covering move on Bank Nifty to Bank Nifty 32,005. Just wow. Okay, so 14,300 is holding for now. So what I'm going to do is move up half my puts to 14,250 again. And this time set a stop loss which is not easily going to get triggered because Bank Nifty is at 25,500 and like this is way oversold and this will get, I'm not seeing downside from here further. That's my view. Could be horribly wrong, but that's the view. And we have calls anyway to compensate for that. Okay. Yeah, so this is a position that we're going to hold. 30% of our puts we have moved higher. In case we start heading above, we spend another 15 minutes above 14,300, then we'll move another 30%. And in case we start heading higher, then we'll move up the rest of them. So that's the plan for now. Okay, almost 1 o'clock. Update is moved up all the puts to 15,250 since we're holding above 14,300. And since there's 25 points in this and only 15 points in the 14,400, have moved a little less than 40% of the position to 14,350 calls sold, which, so if you look at it, 40-60 weighted average, this is more or less balancing the puts for now. And yeah, we have more or less 2 hours to go for averaging period to start. And we have a 100 point triangle and a 150 point triangle, which still have decent premiums in it, unless there is again one more big volatile short covering move or another downside cascade, where at this point I don't know what would be the next support. 14,200, I guess, round figure. Meanwhile, Bank Nifty also has taken support at 32,500 and is heading back up from there. And IT continues to trade at the day's low. Reliance still holding 2,000, which is pretty intense. So, okay, we're seeing dip again. IT continues to be at the day's low. So we don't want to have too much directional risk. And because of that, we have moved the rest of our calls to 14,350. Now we're on a 100 points triangle, and this has, let's say, 4950 points in it. So 14,200 downside break even and 14,400 upside break even. Yeah, the idea from here once again will be to roll away and risk off if it is on the put side, and it's on the call side as well. We will roll away and risk off. And that's the plan for now. Still 2 hours to go. What will seem like a very long 2 hours on a day like this till averaging starts, and good amount, 50 points still available. Our hedge has 5 points, so 45 points potentially. We'll keep you posted. I have stop loss orders also open on both at like 42, 43. So in case there's some big cascade, then once again it will be the same process to be repeated. Okay, so what is happening is Bank Nifty continues to slide. Now once again probably heading back to the day's low. It's at 32,500, which is why I'm not rolling away my puts easily. Because Bank Nifty being at 32,500, a lot of positions building up on Bank Nifty at 32,500. Nifty also saw some positions build up around 14,300. So one way to do it would be get out of this puts immediately and move them to 14,200, which is available at 21. It's a good price. We'll wait for this to actually slide. You see the spot is still 30 points away. So we're not going to make that change right away. We will wait because our view is that Bank Nifty should halt at 32,500 and should not be too much downside. And Reliance continues to hold about 2,000. Somehow, Reliance just continues to hold about 2,000. So yeah, during that down move, because of the number of down moves that we saw, we'll see that the IV will spike, the puts will expand, which is why our stop loss also is a little bit on the higher side. We don't want a quick swing to stop us out and then also give us big slippage. So that being said, we will continue to retain this until something fundamentally changes, like the lines breaking down below 2,000 or Bank Nifty sliding below 32,500, at which point we will have time to exit this. If not, our stop loss hits also, that's fine, because our calls will give us whatever premium that we lose in the stop loss on the put side. Okay, so Bank Nifty continues to hold above 32,500 and Reliance is just at 2,000 now. Selling pressure is picking up. We don't know about volumes. What I have done is moved about 30% of the calls to 14,300 now, because all of our puts are at 14,250, and criteria will be enough volume on Reliance to break 2,000 or Bank Nifty breaking below 32,500 by 40-50 points, and then we will immediately start cutting these puts and move them lower. So that's the plan. No respite at all today. Today would have been very tricky. If people didn't use stop losses, you can only imagine what would have happened. Can be very, very dangerous. People try to buy the dip in between and so on, that would have worked. Anyhow, for now, our position is fine, and we're seeing some kind of pullback from the lows. Very simple. Spot starts heading above 14,300, holds there for 5 minutes. We will exit this 30% of our calls, which are at 14,300, and move them. They will expand into something like 42, 43, something like that. At that point, this also will have good value in it. It will be like 20 something, and we will shift here. If not, we'll keep it exactly as it is. Bank Nifty has taken support at the same day's low, and so has Reliance. Reliance is not heading below 2000, not working. IT continues to remain more or less holding, not cascading down ITOs. So that being said, we put our 14,300 calls, and now it's up now as has started expanding to 14,350 calls. We'll hold this position like this for now. We'll wait for an actual test of 14,330, 340 to then start seeing how to manage these calls. These calls have basically doubled in the past 10 minutes. So that being the case, we still find we have absolutely no reason to worry about. We have enough credit from the good side to balance that. And okay, so right now a lot of positions are being built up around 14,300. All these positions largely have been unwound, and 14,300, the straddle actually has 80 to 83 points in it. Don't say it often that there's 1.5 hours to go for averaging, and there's 83 points at the money straddle, and that just shows the kind of market that it has been today. Now we're once again taking a dip below 14,300, but more or less working with the idea that 22,500 and in generally the days low on the Nifty should hold from whatever that panic unwinding. So we see when that low happened, there's a lot of unwinding happening. Now that unwinding to a large extent has happened. Counter positions, hedging positions to neutralize the delta in futures to a large extent will be taken, which is why we're seeing these levels hold. And we'll continue to hold this exact same position. Why? There's almost like 40 points more than this position at 14,300, and seems like a high conviction thing. And past few expiries haven't been following this, but in general, expiries like to expire on the dot at a strike. Like a preferred expiry would be 14,300 or 14,350. That's how expiries work. Why are we not moving to the 14,300 short straddle? Very simple. Managing it becomes a little more difficult, especially on a highly volatile day like this. There can be a quick swing to this side and a quick swing to the other side. By the time you adjust one way, or at least in my experience, I found by the time I'm able to cover one way, you can lose the plot very easily. And while the probability of profit is better, probability of a higher median profit is better from this current position. Okay, big green candles being formed on the bank Nifty, some kind of short covering move potentially. I'll keep you posted. We're not going to do anything until we take out 14,330 on the upside with our calls. So very tight range, but for now this is what works, and we'll stick to this. I'll keep you posted. Okay, today is just one of those days where two things are happening. One, my placement of stop losses is really not working out properly, and what just happened? Big short covering type of a candle expanded the calls immensely. Stop loss set at 38 was hit and executed at 40. So 2 points of slippage there, and just one of those days where you're just getting stopped out in the worst possible ways. Like you're losing 5 points just because of how you place your stop loss. I've sold the 14,400 call now, and we'll probably see if we hold over 14,350 and move up the puts. Meanwhile, inside stop losses on this, which don't get swung out. Basically, stop loss was set at twice the price of the call, and despite that, very tricky. Happens. These things happen in the market. You can't complain about it. Get frustrated. It's not going to do anything for you. So it's just one of those. I mean, how often do you see a 2% swing on an expiry? Not very often. So a complete expiry madness. We'll just go over what has happened in a second. Massive short covering move. Bank Nifty made a 700 point move, is now at 33,200, and yeah, one can imagine what that has done to Nifty. 14,500 calls are now expanding. Great. Okay, so basically what I had to do is get out of the calls really quick. Couldn't record that. You'll have to take a look at the trade book to get a better picture of exactly what was done to manage. Basically kept cutting out of the calls, exited the calls, moved the calls higher, and had to rinse and repeat that process, and now have moved the calls all the way to 14,500. Wow, absolutely ridiculous kind of short covering move. 14,500 should be a psychological level which might halt the short covering move. If they start expanding to 30, 35, something like that, then we just get out of these and then probably just stay on the puts and capture the put side. We are back to more or less break even for the day once again. Okay, so the up move kind of halted at 14,400, and after heading back all the way to 14,450 has now started heading back down. There's 1 hour left for averaging, and currently massive, like 14,200 put is trading for 4 points, and yeah, that's the kind of IV that we currently have. We have a 14,350 put and a 14,450 call. We have to once again roll down the calls, take an additional call side credit, and yeah, our hedges are worth 5 points, and this currently in itself is worth 37. We're holding from this position. Overall, our mark to market, we're down about 3 points, and yeah, I guess there's nothing that can be done about that. It's just been one of those days. Now we'll just hold this position until we see a clear break below the strikes, because we're just seeing random movement and we need to be able to get out well in time, but at the same time not just get stopped out and reversed on each time. So yeah, Bank Nifty is getting halted basically by 33,200. So okay, 50 minutes to go for averaging, and basically 14,400 is now acting like some kind of support, and IT is also picked up from its lows. Reliance is basically of no concern at this point, and even the pricing of options, the IV on the call side is spiking up like anything the moment there is the slightest of up moves. So to balance that, we've moved our sold puts now to 14,400, and we sold them at these prices. So we sold them at 26, 27, 28, 29. We've set very wide stop losses of 48 and 49 on both. There is currently 50 points in this. So there's 50 points in this triangle, and we are overall down about 3 points, less than 3 points. And what will happen now is there's only 50 minutes to go for averaging, and there's a 50 points in 50 points triangle, which means our lower break even would be 14,350 on the downside and 14,500 on the upside. We'll wait and see now what happens. If we have a breakdown below 14,400 and our puts will be in the money at that point, then we will switch to the 14,400 straddle, and if we continue to cascade down from there, then we will just get out of the sold puts. This has overall been quite a frustrating day to navigate, and don't want to overtrade beyond that point. Now we'll have to wait and see if 14,400 support holds or start breaching below that. there seems to be a huge amount of demand that's picking up every time we're dipping below. Okay, so the setup now looks more or less like very biased towards the 14400 expiry. So rather than spreading our risk, we're going to concentrate it around 14400. We are sitting on finally a 14400 iron fly, and we will set stop losses on this at 50 each. The straddle itself, with 40 minutes to go for averaging, is trading at 67. So we'll be setting this at around 50 to 55. So we'll set each leg at 51. Why is it arbitrary? It's just slightly under what we'd consider. Okay, so we got completely played today by the market, left, right, and center. So basically, what we tried to do was move to the 14400 short straddle, and yeah, when we tried to move to the 14400 short straddle, big down move, put stop loss got hit, and big slippage here as well. 4 points, 4 points, 4 points. So that happened, and then what we've done now to just like as the last trade that we take, because at this point I'm frustrated and I feel like anything I do beyond this will just be stupid. So 14350, 14450, strangle has 20 points. Our hedge has, let's say, 2 points in it, more or less. We have set stop losses for this at 27 on either side. I said this initially, now I will move it in closer. There's 20 minutes to go for averaging. I will move this in closer, as this is trading at 19. I'll start selling it at 25 and so on and so forth. And that'll be the last trade. If stop loss is hit, then I am out, and there'll be no more trading for the day. Considering the day it was, on our initial sizing being down about 15 points is not such a bad thing. Should have been able to react to the short covering part of it. Earlier reacted late and then got reversed on. So happens, can't do anything about it. That's just how the market is. Now this is the final trade, so I will let you know what happens into averaging. Okay, there's one major issue now. Obviously today we got played. Oh, finally we were able to exit, because we was not able to exit that position for a while. Massive slide once averaging started, and yeah, really bad day towards the end. Was not able to exit out of short puts. By the time I was able to modify the order, it just took way too long, and yeah, I was trying to exit 14400 put at market, but the order just said cancel, 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 cancel. Trying to buy back at 27, cancelled. One of those unfortunate situations where you're not able to execute the order that you want to execute. Anyway, that being said, last minute massive slide. Very, very tricky day, very, very bad day for me. Just one of those days that couldn't be managed. And yeah, that should more or less be the summary for the day. I will not be trading tomorrow and on Monday as I'm traveling. This was one of those really bad days, had like a 10% drawdown, but it happens and this is part of the market. And okay, more or less completely exhausted. There's some 30 paisa left in these calls that we will be closing with. For the day, we have closed down 13.9, which would be 10% of the margin that we used today. Horrible day, and definitely one that will cheese you out, but this happens, and yeah, that's a 10% on margin loss. More or less for the month we're still deeply in the positive, but a day like this can really throw you off. That being said, I will catch you guys next on Tuesday. So thank you so much for watching, and I hope if anything today's takeaway is that losses happen and they can be quite bad when they do. So thank you so much for watching. Have a great evening.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.